In today's MTPredictor video, I'd like to look at an example of day trading the NQ using the new micro mini accounts or contracts that have just been released on the CME. But as usual, let's start with our risk disclaimer. I'd remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. We'll be looking at a losing trade in today's video, and just to remind that all professional traders must accept that there will be losing trades, and it's just a part of everyday trading no matter what trading approach you do. Right, let's go over to MTPredictor 8, which is our standalone version here. I'm just going to go back to the 3-minute chart. So this is the new micro E-mini Nasdaq here, and as you can see, if I go to the normal one, this is the normal one, that's the normal one there. The charts look pretty much identical. So the analysis is pretty much the same whether you're using the normal E-minis or whether you're using the new micro accounts. But I'll just carry on with the micro accounts. The main difference is the position sizing, and we'll show you that later. Right, so let's do our analysis. So this is a 3-minute chart yesterday. This is the 24-hour, sorry, not the 24-hour, this is the day session only chart that runs from 9:30 to 9:15 New York time. And as you can see, we had a TS3 W3 trade set up here that unfolded a bit later in the day, New York time, just before lunch. This is UK time I've got on my charts here. You see our MTP trend was red, showing the large view trend was down. So I'm just going to go back, use our trading mode to jump back to what the charts looked like at the time, which was there. Now if I right mouse click and do the analysis, you can see actually we have a huge number of contracts here because I've got my normal default count of $20,000. So this is the difference with the micro accounts, is they are a lot smaller contracts. So if you have a smaller account, say for example rather than $20,000, if you had a $10,000 or even a $2,000 account, let's have a look at a $2,000 account here, then place the analysis on. So I'll right mouse click, do analysis, and here you can see this is the benefit of using the smaller accounts or the smaller micro contracts, is because the account size is a lot smaller. It means you can still do correct position sizing with a lot smaller risk. Here you can see that risk of a 2% on a sample $20,000 account will allow you to trade 4 contracts for a risk of only $34 US. That's a very small risk compared to the normal E-minis. And this is all taken care of for you in MTPredictor automatically. So here you had a potential trade setup. Let's move forward. So this would have now taken you in. You have now been short 4 contracts or 4 micro contracts. Let's go forward. Go forward, go forward. It looks all okay now. It's starting to go with you. But then suddenly, do you see this? It starts to go up, and it would have actually stopped you out there. So it would have stopped you out for a 1R loss. Remember what I said at the start of the video, losses can and will and do unfold. This is part of professional trading, that always will be losing trades. But by using position sizing, this means the loss will be kept small at 1R or 1 risk unit, in this case $34. So you'd have had 1R loss, so that would have been losing trade. So I'll just turn trading mode off, and you can see the market carried on down, which would have been slightly frustrating because you'd missed out on the fall there. That is why it's best to have the scanner running. If I bring my scanner out here, and rather than just following the 3-minute charts, you also follow the 5-minute charts as well. Remember, we use 15-minute for our hard time frame, which we'll look at in a second as well. So if I now skip over to the 5-minute chart, can you see that there would have been that's our history triangle there. That would have been the losing trade on the 3-minute chart there. But there was also a second attempt at it a bit later on, a few bars later. So where you had just stopped out on the 3-minute chart, it would have given you another sell setup there. Again, our MTP trend was red, so it looked like a perfectly valid sell setup. So let's again place our analysis on, and that would have given you this time short 2 contracts. Remember, we're still doing the 2% risk, in this case a sample $2,000 account using the micro E-minis for a risk of $27 US. This case the market came down nicely to reach the first target here, where a plus 4.2R profit was available. In this case of just over 130 or about $113 approximately. And that's the benefit of using position sizing, because when the profits come through, they're large, but not just large in dollars, but large in relation to the initial risks. In other words, the loss before was minus 1R, and this profit would have been plus 4.2R. So the profits are large in relation to the losses. If you're a more advanced trader and more experienced, you'd have gone out to the higher time frame. For you guys who've been following us for a while will know that we look at the higher time frame chart to gauge our large degree trend direction. So here, let's have a look at where the higher time frame DP would have been originally. So if I right mouse click off that previous pivot, that would have been the higher time frame DP coming off the high there, so that gauged the large degree trend as down. The market started to come down. Let's take that off so it doesn't confuse us. As the market was coming down, where would have been the next support zone? Well, it would have been off this previous low. I just want to use our trading mode here again just to show you what this would have been like in real time. So that would have been your 5-minute sell. We go back to the previous pivot low, which is here. We right mouse click, we do decision point. Can you see how that would have been on the chart in advance? So it would be there before the market even got there. So if I now turn trading mode off, you can see that's indeed what the market did, went down to the higher time frame support. So when you come down to your 5-minute chart, can you see what happened? The market went down and basically tagged that support level, which pretty much made the low of the day. So if you were trading this yesterday and you're in this trade here, you'd have looked at our MTP strength indicator or our MTP trend indicator as you came down into this first level here. You'd have gone down and seen it was what we call strong. In other words, it was beyond these grey bands here. Can you see that? So at that point there where it hit the first target, you come down and our MTP trend was beyond the grey strength band. So that means the market's strong and probably going to carry on trending. In other words, carry on in the original direction, in this case down. So you'd probably use your ATR stop, which is our red dots, to keep on following it all the way down. You then had a decision to make, because as it was coming down here, at the higher time frame support zone, which would have been 15-minute, you're getting quite close to the end of the day, and here the profit would have been a lot bigger. Would be almost 8.5 times the initial risk. And again, this is the beauty of using position sizing, you can see, because the profits are not just large in dollars, but they're large in relation to the initial risk or the losses taken earlier. So as a more experienced trader, as you're getting close to the end of the day and you're at higher time frame support, you'd probably want to bank this profit. So as you can see, this is a good example of using MTPredictor to day trade the new micro accounts, with an example on the micro Nasdaq yesterday, where in particular you look at not just the 3-minute charts as we had here, but also keep an eye on your scanner to make sure that you follow the 5-minute charts as well. We then use the higher time frame support and resistance zones to project higher time frame support and resistance areas. You then use those to help manage your trade. We use correct position sizing to keep your initial risk small and under control. So when the losses come through, which as we've seen, the losses are kept small, but when the profits come through, the profits are large, but not just large in dollars, but large in relation to the losses or the initial risk you took earlier. So a good example of day trading the micro E-mini accounts yesterday, with a good example on the Nasdaq micro, where we had a lovely second trade of the day that came down and made approximately 8.5 times the initial risk. But as I said earlier, there will be losing trades, and that came after a small -1R loss a bit earlier in the day.